Good afternoon, traders. Good afternoon. I hope you can hear me. I hope you can see me. Welcome to today's session. We're just here we are, 2 o'clock London time. Great to have you all here with us for the next installment in the Admirals Trading Spotlight webinar series. And here we are today to talk about, new trading strategies for 2022 that beginners can take on board. If you're joining us for the first time, it's great to have you here. Okay, fantastic to see you joining us. You're very, very welcome. Alternatively, if you're watching this later on demand, then if you're watching this on the Admirals YouTube channel, you're very welcome. But just be sure to give us a little subscribe and a thumbs up if you find this content useful to you in your trading. As always, I understand we have a very broad spectrum of traders who come and join us for our sessions, from complete beginners to people who are intermediate advanced. Hopefully there'll still all be something of interest for you to take away with yourselves as we talk about new trading strategies for new traders. And also I appreciate that we have a global audience who join us for our English speaking webinars, and wherever you are in the world, it's great to have you here. You're very welcome, and I hope that 2022 is a fabulous pip-tastic year for you all, okay? And I wish you every success in your own trading endeavors. So without further ado, why don't we crack on and move on to the webinar topic today, which is about new trading strategies for beginners in 2022. So just bear with us a moment, and what we'll do is I'll bring up the slides for us, and we'll be able to take a look here and stuff. Just give me a sec, bear with us a second here. Here we go. Bang. Great. So I hope you can see the slide. Okay, I hope you can see the slide. I hope you can see me. Just move myself up here a little bit into the corner. Okay, so don't get too much into the way. And here it is, as I said, simple trading strategies for beginners in 2022. Part 2. Those of you who may have remembered, you might have joined, I did one last month, okay, in December. And if you remember, that was on trading something which I call the fiery cross, which was about basically using price action and moving averages in an effort to basically allow you the opportunity to start a new trend. Quite simple, quite visual. Trading strategy, and that was that was kind of a trend following strategy, whereas today we're going to do a little bit of the opposite, and we're going to be focusing on sort of reversals, mean reversion trades, okay, and which will become clearer as we go into the session. There'll also be a part 3 next month, okay, where I'll add in another trading strategy, so be sure to watch them. If you didn't catch the first one, you'll find it in the Admirals YouTube channel, so be sure to check that. And of course, this will be here on the Admirals channel as well, shortly after this session finishes. So remember, here we are, Admirals, a Forex and CFD broker, with a wide range of instruments for you to trade, with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage markets with both MT4, MT5 platforms. If you've got any questions about Admirals, be sure to get in touch with your account representative, and they'll be very happy to help you. Furthermore, if you're looking for a bit more time-sensitive content from Admiral's team, well, then you can follow us on Telegram, okay? And you can see us there at Admirals. Hopefully, you should be able to see that and connect with us. And as you can see, my wonderful assistant has just popped up there a link for you to be able to sort of just click in and subscribe. And as I said, that will provide you a little bit more time-sensitive content from all of the team at Admirals. So what are we going to talk about today? Well, as I said, it's supposed to be about simple trading strategies for beginners in 2022. So, as always, we'll do a very, very quick recap on the different types of trading methods available, just if you're a new trader and, you didn't catch the first session. So just to bring you up to speed. We'll also talk about, a little bit about, how to decide which one suits you. And also we'll talk a little bit about, how you trade through different trading environments and methods. But in particular, as I said, what we're going to look at is, whereas part 1 looked at trend following simple trading strategy, today we're going to look at a reversal one. And in particular, we're going to look at something called a false breakout. How do we use them? And what is a simple false breakout setup for us to use in intraday trading? And although today I will focus more on intraday trading, the actual setup, you could use that from 4-hour, daily, weekly, monthly charts. Okay, it's we're going to focus on intraday because that's where I use it a lot. But it's not all for intraday. You can use it across all time frames and across all instruments, because I appreciate we have people here who join us who have trade a range of instruments. Those who don't know me, my name is Paul. I've traded for many years now, and I've traded for funds, I've traded for clients. Okay, my trading focuses on FX indices, commodities, where I'm a trend trader for my longer term trading, and I tend to be a mean reversion and reversal trader for my intraday trading. So a lot of my own personal experience will be coming through and coming out in this session that we're going to look at today. So, simple trading strategies for beginners in 2022. As the slide says, ladies and gentlemen, we often see that many new traders are looking for complicated trading strategies when they're beginning their trading journeys. And we've all done that, okay? We've all been there, myself included. We think that, more complexity means we're more likely to be right. But in reality, it is often the simpler methods that help the traders as they learn to trade at the beginning of their careers. This is, as I said, part 2 of the second session, looking at simple trading methods for 2022, and we're going to add another one for next month. And in this session, we'll look at how to trade a simple false breakout on an intraday basis that beginners can employ to help them engage with and trade markets successfully. But we'll start by just reminding ourselves of the kind of main trading styles. As I said there, though, lots of new traders, they're looking for the most shiny, most exciting, most complicated trading strategies because they think that's what they need to be a successful trader. Whereas in fact, actually what you'll find is that a simple setup that you can execute clearly time after time after time after time is much more likely to suit you as a way to be a sustainable success as a trader. So those of you who've joined me, many times over the last 18 months, 2 years or so that we've been delivering these webinars, you'll know I'll talk about that. When you look at lots of the trading and investing methods out there, you can go onto the internet and sort of Google for things, and you'll find thousands of lots of different trading and investing methods. But generally, what you find is they tend to boil down to one of 2 simple styles. You are trading either a break of a line of support or resistance, or you're trading a bounce off a line of support or resistance. And as simple as that. Remember what I just said on the slide before is that lots of people make these things as complicated as possible. And actually, what we want to do is just boil it down and just understand the kind of the simple sort of elements of these things, because once you do, well, then you're in a position to start to sort of build and adapt and develop and shape your own simple trading strategies that will actually work for you. And that's actually where we want to get to. Myself and my colleagues Jens and Marcus and stuff, they will share lots of different trading ideas and thoughts, and ultimately what it is about you starting to shape them into your own particular trading method. But if you can remember that pretty much all of them, the vast majority of them boil down to a break of a line of support resistance or a bounce off a line of support resistance. If you can remember that, if you can work with that, well, then that's a starting point for you to develop, your own ideas and thoughts and methods. So, if you're trading a very simple break of a line of support resistance, well, it's not that difficult. You're identifying resistance, drawing that in, you're identifying support, okay, making sure you're drawing that in, and in this particular case, well, as I bring up the old drawing tool, what did you have here? Well, in this particular case, you were trading a break of a line of, in this particular case, a break of a line of support. And, you're either going to be trading breaks of line of support of resistance or a bounce off a line of support resistance. Just, as I said, for the new traders, just keep it nice and simple, all right? Don't overcomplicate it. On the other side, you might be trading a bounce, and if we look here, this is the euro dollar on the euro daily, okay, in a particularly nice downtrend. But what we can actually see as we start to look deeper into it is that we see price bounces off, in particular, the 50-period moving average here, which is acting as dynamic resistance. On my charts, the 50-period moving average is normally the red moving average you'll see there. But what you can also see, it does it actually about 3-4 times there. Some of those times it is also bouncing off what is also a level of static resistance. And there you can see that's been drawn on there at the same time as, bouncing off dynamic resistance, okay, which is the moving average. We call it dynamic because it's constantly moving and updating. So, you've got a break of a line of support or resistance, or a bounce off, a level of support resistance. Let's keep it simple to begin with, ladies and gentlemen, today. All right, that's what we were trying to understand. And it is actually perfectly possible to have this. And I've shown this chart before because I like it, because it actually is, it just gives us a fantastic insight into how that this can work together, both bounces and breaks. This is a weekly chart of the Kiwi dollar against the Japanese yen, and hopefully you can see there very clearly is that over a period of from coming in here, okay, to actually ultimately entering in here, almost what is almost kind of sort of 4 years worth, we see price kind of bouncing off a level of support, okay, at 58. And also bouncing off, okay, a level of resistance there up at 69 until price breaks it, okay. Price breaks it, and then it goes off into a new trend. But remember, this is a weekly chart. That in itself, okay, there's lots of swings that were available to be traded there as well, okay, because it's a weekly chart. But you can see that, price is just, it's bouncing off levels of support resistance, and then in the end, it breaks a level of resistance and it carries on to a new trend. And that's, as a trader, if you can start to measure part of your analysis, start to understand that, get a view on that, that will help you enormously, okay? You don't need to make this more complicated, all right, than it needs to be, all right? As I said, a lot of us do it, and, I was the same myself, okay? It's part of that journey that you think that by adding more and more indicators, you think by making your strategies more and more complicated, that invariably what it means is that you will avoid having to take a losing trade. That's what actually is going on. But actually it doesn't work like that, okay? What actually can help and what's better for you is to have just a couple of simple strategies that you can see, recognize, and execute flawlessly time after time after again. That is what makes the difference. So as the slide says, that they both have their pros and cons, right? There's no such thing as perfection in trading. It's about finding out what works best for you. Some people prefer trading breakouts. Some people prefer trading bounces. Personally, okay, especially in my trading, I prefer to trade bounces as part of a pullback if I'm in a longer term trend. And the reason for that is that, in trend trading, it gives me an opportunity to enter at what I believe is a better price. And also, if I'm wrong, I know I'm wrong far soon, okay? My price will get washed out. My trade will get washed out quicker, which might sound kind of a bit strange, but, that's the way I prefer. If my position is wrong, if my idea is wrong, I'd sooner know as quick as possible so I can cull that trade, get rid of it, and then move on to the next winning trade. But as the slide says, I also love trading a breakout when it fails. And that's what leads us on to our strategy for today. All right. I love trading a breakout when it fails. And we will learn more about that in a moment. So it is my belief, some people may differ, but it is my belief that, breakouts fail all the time. When I say fail all the time, what I mean is, they consistently fail, okay? It's not every single time. You can see there will always be breakouts that win, but an awful lot of them will fail, and especially I find in FX markets on an intraday basis, right? So if you're a breakout trader and your breakout fails, that might mean you're a failed, it's a failed trade, okay? Then you've lost. However, for a patient and educated trader, it also offers an opportunity. So what we're going to look at is, for the rest of this session, we're going to look at how we could trade these false breakouts, sometimes called fake outs, whichever term works easier for yourself, okay? But what it is it's a breakout that has failed, okay? And that, as I said, offers up opportunities for traders who are educated and ready to get cracking. And that's what we want to look at. And I'm going to sort of share with you a very simple definition of it today. So as I said, it's about having simple trading strategies that you can take away and utilize in your own trading from tomorrow. That's what we want. So, here is an example. This is the pound against the US dollar, okay, 5-minute chart. I trade a lot of sterling on an intraday basis, so you're going to see there's lots of examples for that. Let's bring up the old drawing tool here. Actually, if I look at this here, okay, there was actually a very, a double top there, okay, and kind of clearly a level around about that kind of 140, all right, to 80 is, kind of a level of resistance there. You can see it. And actually what happens is, price comes up to it, falls away, price comes up to it, falls away, price comes up to it, falls away. Okay, falls away consistently. So there is that level of, there's clearly that kind of level of resistance there, about 140, 80 to 85, a little zone there, and in that particular minute, every time price kept coming up to it, it failed to break out. Okay, every time it tried to break out, it literally got pushed back down and actually reversed away from it. And as I said, there will have been, let's just clear these drawings, having seen this kind of area here, there will be lots of people who will have had their kind of buy trades here. Okay, they'll have their buy trades here, or ladies and gentlemen, just remember, if there's people who've maybe shorted, okay, down here, their stops might have been above these recent highs. Okay, either way, there's orders here and there's orders being triggered. Okay, and that starts to give us a little bit of a hint, a little bit of color in terms of what we're seeing on the landscape. But what we're going to go into is specifically, well, how could we recognize these levels? What is the particular that we're looking for? How do we turn it into a particular simple trade for ourselves? So what I'm going to do here is I'm going to start with actually showing you a intraday simple false breakout short setup. Okay, so we're looking for shorts here. And as I said, this can be used 1, 3, 5, 15, 30-minute charts. As I said, primarily we're going to focus on FX intraday, but actually the setup works across all time frames and across all instruments. Okay, it's just that my particular practice, my particular experience is focusing on sort of intraday FX markets there, which is, as I said, it's one of the jobs that I do, and so I'm just sharing those ideas with you. So here's what we're looking for. We're looking for one touch of resistance. Okay. If you have more, that's great, but it actually only really has to be one touch of resistance. It is either, that resistance should either be something like a big round number, so a 000 number, maybe it's like 130 in pound against US dollar, 120, 115, 112, big round numbers, that's what we're looking for. Clearly a level of resistance that has been defined. Okay, that might be a horizontal one that you've drawn in from your monthly, your weekly, your daily charts. Interestingly and increasingly from, on an intraday basis, it might be a previous day or a previous week's high. Remember, this is for the short setup. What we want to see is price touches the level. Okay, price actually touches the level, goes up to the level, and then prints a bearish pin bar with a bearish close below the level. All right, what it has done is that it's created a false breakout, and what we are looking to do is to sell the break of the rejection candle. So in this particular case here, this thin blue line here is actually an indicator that just tells me the previous days and previous weeks highs and lows. Hopefully you can see there, price, in the morning session traded up. What it did is actually came up to that level. You see it actually traded in pip or two above. It there's no number that needs to trade above. Sometimes it just trades up to that particular level. All right, and then what we can see, and what is important, is you can see is the price got rejected away. It actually went past its open and it closed down on its low. What we have there is, it's a bearish pin bar, it's a real bearish rejection candle. We've got our setup. Okay, we have got our setup. That was a false breakup. Price tried to go up to the level, couldn't break out of it, and it then just rolled over and fell away. What we're looking to do is, at this particular stage for a simple trader, what you'd be looking to do is to sell the break of that rejection candle with your stop loss above, and then on an intraday basis, what I would be suggesting is you target kind of 1.5 to 1. All right. Now, some traders might like to go further. Some traders might like to sort of trail their stops. That might be absolutely fine for you. But for today, for a simple false breakout short that a trader can take away. You trade the break of the rejection candle, the low of the rejection candle. Stop loss will go a few pips above the high, and you're looking for a reward to risk of about 1.5 based on your particular trade risk. Okay, nice and simple. All right, it's almost once that trade is on, once your stop loss is on, once your trade is on, you can just let the trade play out. Okay, just let the trade play out. It's in the sandbox. Once it's there on your platform, you can do that. That's actually all you need to be able to sort of look at that. So with that in mind, let's have a little look at a couple of examples. So, as I said, I trade a lot of sterling on the intraday basis. So here's the chart here. Let me just bring up the old drawing tool here. What we can see is this is pound against US dollar 15-minute chart. Okay, the grey box is the Asia session. What we see is price breaks out. Okay, and then what happens is, as I said, this runs up. Okay, it runs up to what is the previous day's high. What can we see here? Price is moving its way up. Price tries to break through that previous day's high, doesn't it? Okay, and what we see is that it pushes up, but then it falls back, collapses all the way, and it closes. Okay, closes beneath. Okay, back on that side of the level of resistance. It's a false breakout that has printed a pin bar rejection candle. Trade is on. Okay, that's our trade, and so we're effectively looking to trade a break of the low of the rejection candle, stop loss a few pips above the high, and with a target of around about 1.5 to 1. Okay, our trade risk is our target. As you can actually see, this particular trade, it just absolutely collapsed. That really was the high of the day. Okay, but what I would suggest is to begin with, it's more about getting it into a nice little routine. Okay, see the trade, take the trade, manage the trade, exit the trade, debrief the trade, repeat the trade. All right, just get yourself into the routine of that. Okay, 1.5 to 1. Okay, and reward to risk is absolutely fine, because at the moment what we're just looking to do is to be able to identify, see it, trade it. Okay, and with a little bit of experience, and once you start to get keep good records, well, then you'll be able to see exactly how well and how far that trade may go. And on some of the particular currencies, okay, some of the instruments, you may actually wish to get to a point where you are stretching your targets. But for today, to begin with, you're trading the break of the low of the rejection candle, stop loss above a couple of pips above the high. All right, and your target is 1.5 times your risk. All right, keep it nice and simple. This, as the name of the webinar implies, this is about simple trading strategies for beginners in 2022. Okay, and that's what this is. So I think I've got a couple more examples of these for us to go through, so you can get an idea. Here's an interesting one. This is, not unsurprisingly, another sterling chart here. Okay, where I'll draw into up here. This is pound against the Swiss franc on the 15-minute chart, and you can see for yourself. Okay, after a false breakout here of the Asian session, price actually sort of drove its way up. What did it do? It came to the previous day's high, and actually it's an interesting one, because actually what we did here is you've effectively almost got like kind of 3 candles there, 3 rejection candles there. Okay, it came up, touched that level right before. In fact, you might even say there's 4 there. Okay, you just got literally lower highs. Okay, and then before the price rolls over and falls away. Then what does it do again? Well, actually it comes back and assaults that level again, and you can hopefully see there price tries to push up and through it, but it can't. It comes back and falls back, and it closes beneath the level of resistance. And even though it was a bullish close on the candle, we would view that candle, that is a bearish rejection candle because of the size of the wick. Right, remember the wick is like it's like Pinocchio. All right, okay, whenever he's told lies, his nose would grow longer. A pin bar is similar in that the kind of where the nose is pointing is the opposite of where we're expecting price to go, and you can see for yourself there. Okay, it eventually rolls over, and it pushes down. It actually pushes down quite nicely, but pushes down quite towards where you want your 1.5 to 1 target. Okay, so you've got actually a couple of trades on there, and it is possible. It is maybe possible that invariably, where you have your particular trade here, that even though your stop loss was there, you didn't really get particularly triggered, okay, until you're actually later on into the a couple of candles later before we ran away. Okay, so there's a couple of opportunities there, and that might well be the case for you. Okay, where it's certain when it becomes to particular levels and areas of resistance. Darshan says, and ain't the next green candle a hanging man? Yes, it is. That is, that one, you could see that as a hanging man candle there, okay, which in itself would be, in this particular case, a bearish reversal indication as well. So you're getting a little bit of additional confirmation, and then of course then you get a couple more kind of lower bearish rejection candles there, which are also now starting to give you. You're also getting higher lows there and stuff. Sorry, lower highs. My apologies. Lower highs before price rolls over itself. Okay, so there's lots going on there, right? Lots going on there. But as I said, this is about just simple ideas. Okay, it's you don't need to make these things more complicated. Some people would like to try and add indicators to this, but really personally I found through my experience, it is actually just about, as I said earlier, see the trade, take the trade, all right, manage the trade, exit the trade, debrief the trade, repeat the trade. All right, that's your job as a trader. Okay, your job as a trader is to get the trade on. All right, that's where we are. So that was short. Okay, false breakout short setups. Let's go look to the other side, ladies and gentlemen, and have a look at intraday simple false breakout long setups. All right. So pretty much, it's the reverse in the sense of the short setups, in that, you are effectively, we can look at it across 1, 3, 5, 15, and 30-minute charts. As I said, because of my own experience, we're looking primarily here at intraday FX charts, but the setup, the setup is the setup, okay, and you'll see it replicates across all time frames, and it replicates across all instruments as well. So maybe you're a 4-hour swing trader on Bitcoin, or maybe you're a long-term trader on gold, whatever it is that floats your boat, whatever it is your particular instrument of choice. And, all I would say is just take away this setup and just go away and just practice looking for it. Where did it set up? How did it play out? Okay, and you might find yourself pleasantly surprised. So in the same way as we had it for the short setup, for the long setup, here we go. Let me just bring up our tools here. We're looking for a minimum of one touch of support. Okay, if you get more than that, that's nice, but it doesn't need to be. It can actually just be one touch of support. And sometimes that might be what happens, is that price comes down, just touches the support and rallies away. That support should either be something like, a big round number, once again, kind of 00, 000, a very obvious level of support that might have been drawn in from, higher time frames. Could be the previous day or the previous week's low, okay, especially on an intraday basis. And what we're looking to see is that price touches the level and then prints a bullish pin bar, a bullish rejection candle. All right, what it needs is a good close back above the particular level. All right, what that does when that happens is, well, that's created a false breakout, and what we're looking to do is we're looking to buy the break of the rejection candle, the pin bar, stop loss underneath the low, and once again looking for a target of about 1.5 times our trade risk to begin with. So in this particular case here, price, you can see it fall on the way down to this blue level, which was the previous day's low. We can see price pushed its way down there, okay, but it couldn't close beneath it, could it? Actually, just think what happened. The buyers stepped in, and bought it all the way back up. And admittedly, it might have a bearish close on the candle, but because of the wick and the size of the wick, this would be taken as, it's a bullish candle. And if you were, let's say, if you were, a little bit hesitant, well, the next candle is very bullish, and then it basically turns this in to a morning star formation anyway. Okay, so you've got additional confirmation, and as you can see, what we'd be doing on a normal plan would be, you're buying the break of the high of the candle, or stop loss beneath, a couple of pips beneath the low, and then with our target around about 1.5 to 1 times our trade risk. Okay, that's it. And as I said, a bit of experience, a bit of knowledge, okay, a bit of just being able, a bit of practice. You might look for longer targets. You might look to try and run that trade, and that's absolutely fine. But today, under the banner of simple trading strategies for 2022, this is what we do. All right, this is what we do. And I challenge you to basically challenge your traders just to go and try and do 25 of each. Try and do 25 of the simple false breakout short setups, and try and do 25 of the simple false breakout long setups. See how they work. Were you able to see them? Were you able to manage risk? Were you able to identify your trade entry point? Were you able to identify your stop loss? Were you able to identify where your target would be? And did the trade actually run further than what the target would be? Is that useful information that might help you in the future to adapt the method to your own particular style? Interesting. All right, there's lots of good stuff to have a look at there. So I've put in a few interesting and different examples. Okay, some scruffy, some not, because nothing is ever perfect. All right, when we look at the markets, as much as we might want it to be. So this is actually the pound against the US dollar on the 1-minute chart. Now, I would not be suggesting that you start out on the 1-minute chart. Okay, trading the 1-minute chart itself, requires a degree of, let's say, experience and dexterity and ability to be able to do it well. But what I wanted to show is that we see these things happen across all sorts of time frames. And you can see there, hopefully you can see that price was in quite an existing downtrend, coming down to the kind of the level here, which we're drawn in as a level of support, which was also around about the 141 number as well. Okay, big round number. We can see the first time price comes down, it actually does bounce off there quite strongly there. Okay, but it's and in some ways that is a rejection channel. But what we're particularly looking for is what we see is that as the price actually comes down again, and we see what happens is price comes down here, can't breaks the level, but it can't close beneath the level, comes back, okay, closes back above the level, and then next minute, okay, does exactly the same again, okay, pushes down, and then basically comes back and closes, and this gives you now you've got two kind of bullish rejection candles, two bullish pin bars here, okay, and we can see that price actually basically moves its way up from there. And for those of you who have a bit of experience, you'd realize that actually what you've just printed there is actually a double bottom anyway, all right, which is quite a good reversal pattern as it is. So you've got a couple of pin bar rejection candles as part of a double bottom at a level of support, which is also around a big treble zero number. The trade is on. Okay, you've heard me talk about it a few times, confluence of events. Okay, when you've got like 2, 3, 4 things coming together at one time and place, that's where the trade goes on. All right, that's where the trade goes on, and that's what we're looking at there. What we've got an example of here, this is pound against New Zealand dollar 15-minute chart. Okay, price has come into the London session, price then falls down. Where does it stop its fall? Okay, well basically at the previous day's low. What we can see is that price pushes down beneath that level, but what does it do? It comes back and it closes above that kind of that level of support, right? And that's the important thing. Remember, it has to come down and touch it, maybe push through it. Doesn't matter, it might push through it by 1 pip. That's fine. Okay, it doesn't, there's nothing that says it has to push by 10, 20, 50. Okay, as long as it's traded down to that level, traded through it, and it is closed. Okay, in this particular level, it's closed above the level of support. All right, and once again, as I said, if maybe you're just starting out and maybe a little bit hesitant, well, look at how the next candle prints. Okay, the next candle prints there as as a nice bullish candle that is now actually given us also a morning star formation there. All right, it's giving you a very clear morning star formation, but as part of these rules, you'd be effectively looking, your entry would be just a couple of pips above the high of the rejection panel, stop loss a couple of pips beneath the low, and then you're looking at your target around about 1.5 times your trade risk. Okay, and yes, you can see that actually it actually goes much further, doesn't it? But you don't know that at the time. All right, it's always easy in hindsight, right? You don't know that time. Your rules are simply once you identify the setup, okay, for what is basically it's basically a long trade here. You're getting long a couple of pips above the high of the rejection candle, stop loss beneath a couple of pips beneath the low, target 1.5 times away. Trade is on. All right, remember that's what I said. Trade is on. Okay, that's all you need to work with. So here we go, pound against the Aussie as well, and this is kind of what makes this an interesting one is that and why I included this is because what we've had is we've got 2 of these. Effectively what we can see is price has been in the Asian session there. Price comes out of the Asian session. What does it do? All right, heads up to the previous day's high. What does it do? It trades up to it. Can't close above it. Falls down away from it. Close beneath it. So there we have, we have a short setup. We've got a false breakout short setup there, haven't we? Bosh. Okay, we're getting short, just a couple of pips beneath the low of the candle, the break of it. Stop, a couple of pips above the high. And your target would be around about 1.5 to 1. But actually, what you can see happens is that actually price continues. It goes all the way down, doesn't it? What stops it? Well, what stops it is price basically does a false breakout of the previous day's low as well. What does it do? It trades down to it, but can't close beneath it. Price pushes back up, closes nicely above it. That we now have a long false. We have a false breakout long setup there. Your entry long is a couple of pips, above the high, stop beneath the low. right? The next candle is very bullish, which actually makes it also, makes it a very nice clear morning star formation as well, before you can see price goes all the way back up to where it tried to trade through earlier that day. So I wish the intraday FX charts were like that every day, okay, giving such nice clear examples. I'm here to say that they don't, unfortunately, but when they do, you're just very thankful to have the opportunity to trade a couple of very simple setups, okay, simple, clear, unambiguous, okay. Remember, false breakout, price needs to trade to the level, right, but it closes this side of the level, okay. It doesn't trade through and close the other side, okay, because then you are into breakout territory. This is about a false breakout. It's tried to break out, okay, past, in that case, previous day's high. It can't make it and it falls away, okay. Once it falls away and closes beneath the level for a short setup, right, and you've got the a nice rejection candle, a nice pin bar, that trade is on. Okay, that is what you're looking for, ladies and gentlemen. Okay, nice and simple. All right, very clear. There's a couple of very clear rules there. Okay, if it doesn't trade up to the level, if it doesn't touch the level or trade through the level, or come back, close this side or our side of the level, right, as a rejection candle or pin bar, then it's not our setup. All right, it's not our setup, and that's what we're particularly looking for. Okay, we're just looking for this particular kind of particular setup indeed. So, in conclusion, ladies and gentlemen, many traders do love to trade breakouts, and and there are, I know traders, clients of mine who do trade breakouts and are very successful at that. However, many breakouts fail, especially in FX. Right, and that's my especially intraday FX. That's one of my core beliefs there. Okay, that's what happens. But a failed breakout does actually create an opportunity for savvy, educated traders, which hopefully you are now, okay? For those of you who didn't even know what a false breakout was at the start of the session, hopefully now you do, and actually can understand it, and you can see how you could possibly trade that. So today we looked at, failed breakouts on intraday FX markets, right? But yes, that was our focus, but that setup will work across all time frames and instruments. We're looking for, trade up to the particular level, then you're looking for, a rejection candle, a pin bar at that significant level of support resistance. Wait for price to break the level, but still close back on our side of that level as your trigger. All right, nice and simple and easy. And my suggestion would be that this video, this webinar is recorded. It'll be on the Admirals YouTube channel over the next day or two. So if you've watched this and enjoyed this and thinking you'd like to know a little bit more, well then do go back, go through it. Okay, go back, find it, look at the examples that I've offered there. Okay, because that's what you're particularly looking for. So with that in mind, we've got a few minutes left. How about we have a little look at some of the live charts? Let's just have a little look at what's been going on today, see if there's been anything particularly setting up itself that we could be interested in. All right. So what we'll do is we'll move across that. But before we move to the charts, just remember, if you have any queries or questions, you want to contact Admirals, you can do so. There, you've got to the email there, okay, at global admiralmarkets.com, and as of course, as we said, we'll find that this video will be on the Admirals YouTube channel, and it's also, you'll be able to see it also on facebook.com at Admirals Global as well. So Darshan's talked about the Kiwi dollar and the Dow Jones. Okay, well we can see what's there if we've got the time for that. So as I said, bear with us a couple of moments. What we'll do is we'll switch across to the charts. I hope you found that useful so far. It's given you a little bit of insight about what you could do. And as I said, let's have a little look at what's going on in the markets at the moment. So just bear with us a moment, and we'll switch across here. Just hang on there a second. What have we got here? Okay. So I'm hoping you can still see and hear me. Let me know if you can. All right. It's been a bit of an interesting afternoon. So why don't I show you just a couple of different examples? Just a little bit of in a live market. So what we had for pound against US dollar this morning. Let's just move this here. So actually what we had was a kind of an interesting variation on it. This is the 5 minutes chart, 5 minute chart here. And what we're looking at is that we saw price coming out of the Asian session coming down. It actually bounces off the 200 period moving average. What I'm interested in for myself here, what we were interested in this morning was, just bring up the drawing tool, maybe you can see already, is that price rallied its way up into what was yesterday's high, which was also at the same spot as the 50 period moving average. And what we can see is price rallied up to the area, tried to push higher, okay, above the 50 period moving average. Remember, you can be a level of dynamic resistance as well, before kind of rolling down and closing back beneath back beneath the 50, and also back beneath the kind of yesterday's high level as well, and before actually then very dropping down, okay, working its way down there on the 5 minutes chart. Okay, so try and show you a couple of different examples just to sort of give you a plethora of examples in live markets to see what is actually occurring, what is actually happening. So let's have a look at another one or two here. I think Darsh said we'll have a look. I've got them on these charts. We'll have a little look. Just bear with us. Just what else we got here? What's here? Let's have a look. Oh, pound Swiss franc. Okay, this morning. So 1 minute chart here. So from this morning, we're on a kind of our session. What we can see is we've got a couple of examples here. Let me just bear with me 1 second. Let me just move this here. Okay, so what we can see here is that price rallied its way up into this blue line being yesterday's high. Okay, yesterday's high, which is also the 200 period moving average there as well. Hopefully you can see price try to push its way up through. Right, but couldn't close up there. It fell all the way back down and closed, beneath that level. It's a rejection candle, and then what we saw is price kind of moved its way down there. Okay, moved its way down. Did another kind of false breakup there on the 50. But then, what we're interested in is actually what we saw here. Okay, is on the 1 minute chart, we came down to yesterday's low, and here's a little bit in case of the 1 minute chart. It kind of traded. And it closed just beneath it, but then the next candle tried to push, and they basically closed right back up above it. Okay, even though it had like a little, it was a pip or so low closing the 1 minute chart, 1 minute candle, the next candle literally just basically pushed down and got pushed all the way back up above that particular level at yesterday's low, and you can see for yourself that basically what happened then after that was effectively it was the kind of the low of the morning session there. All right, price had failed to break out, okay, of yesterday's lows, and you can see how it rallied its way up strongly from there, and it kind of moved its way up pretty closely, pretty completely there. Boom. Let's have a look here. I think did we have a lot of the trades on that kind of euro sterling, what have you? Yeah. This morning, what we saw on euro, which was basically it didn't move as much as I wanted it to. But what we can see here is, this is the 30-minute chart on the euro sterling. Comes out of the European session, comes down to the previous week's low, doesn't it? Tries to break it, but it can't, and it closes back up above it, and then price moves away. And it didn't move as much as we wanted it to, okay, which is not unusual for euro sterling. It's mostly range bound, but it moved its way a few good pips before it kind of came back down to that area again in itself there. Let's have a look. I think Darcy said he wanted to have us a look at the Kiwi dollar, okay, and Dow Jones. Let's see if I've got it on one of these charts on here. I've got Kiwi dollar on here. Let's see what there is. I'll have a little look at. Yeah, I'm not. I haven't traded Kiwi dollar today and stuff, so we'll have a quick look and see if there's anything, particularly on there. If it's set up correctly, if it's set up well for it, might be on this chart here. Let's have a look at. 1 minute. So just looking at. Yeah, well, there you go. Actually, we might sort of say, okay. So for me, I don't really particularly see anything there on the kind of on the shorter time frame there. Okay, for certainly for today in terms of hitting a particular level, Darshan, I wouldn't really necessarily sort of see that myself. Okay, yeah, it kind of maybe it's bounced around, but I don't see particular false breakouts. Remember, we want to see them at a particular level, a clear level. Okay, whether it be previous day's high or low, or whether a horizontal or dynamic level of resistance, okay, or a big round number. I don't personally particularly see that myself on that for you on Kiwi dollar, but I'm quite happy to have a look. Let's see. I think you wanted to have a look at Dow, didn't you, and stuff. Let's see if I have it on here. I suspect it probably hasn't done that much today because, of course, we're waiting for the big CPI big numbers and stuff coming out there. So, which is why we saw the big bump there on Kiwi dollar. I would suggest that's what's happened there. But we can have a quick look as well. We'll suspect. Bang. Let's bring up the Dow. Let's put myself out of the way there, Paul. And let's have a little look what has been going on there. Okay, not really seeing anything to begin with. Not really from our session here. We've got to the kind of yesterday's high here, which joined the session this morning. Didn't really give us any kind of real false breakouts. It's pushing up there, okay, into the levels post news, but that would be, for me, that would be a bit too early and stuff. I'd see there's nothing there. There's no kind of, I don't see any particular false breakouts as what we have just discussed in our session. I don't particularly see any there on the Dow at this moment, Darshan. Okay, not for myself. All right, that's what we remember. We want to see price trading up into a recognizable level, either a previous day's high for the high or low, or week's high or low. We want to look at or at a good level of dynamic resistance or support resistance, or static support resistance, or a big round number. And I don't see either Kiwi dollar or all theirs. Okay, so all right, so Darshan said he traded them himself. All right, so there's well done if you traded them today and you traded them well, but it's not, looking at them, I don't see any particular setups based upon the subject matter that we have just discussed there. So so there you go, ladies and gentlemen. We've run out of time as always, I'm afraid. But I hope you found that useful. I hope you found that interesting. That's given me a little bit of insight into a simple trading strategy. Okay, the sort of the fake out, the false breakout, and how you could utilize that in your own trading. So as I say, watch the session again on the Admirals YouTube channel if you do. Okay, make sure to subscribe, give us a like. Okay, if you found it useful, and just practice it. Go away, take a look at it and stuff, and practice and wait to see those particular setups. So with that in mind, all that remains for me to do is to say, thanks very much for joining us. I wish you the very best of success in your own trading, ladies and gentlemen. I look forward to seeing you at the next session. Trade well, everybody. Cheers.